All right, it's time for another weekly recap. Nice. It's uh, it's pretty early in the morning right now for me. Okay, it's not even that early. I usually make it earlier than this, but last week I haven't been sleeping much, so I'm pretty tired. But in terms of trading, it has been a really, really, really interesting week because it was also a big psychology test for me. Let's say the first half of the week was kind of a bit mentally tough for me because I have some shit going on in private that I had to go after. So it was just stressing me, nothing sad. It was just really stressing me. So it was also really affecting me on my emotions. And I feel like I responded well to it on the training. And the other half, I started to get really tired because all of that was the pressure kind of got away. I got really tired because I didn't sleep much. But still, I feel like I handed it off pretty good. This week's performance has been pretty okay. Now, I took 8 trades in total, okay? Where one of them is break even, 3 of them are losses, and 4 of them are W's. So overall, it's doable. It's okay. But the thing is, I'm gonna go through them real quick one by one to kind of give you an idea. I'm not gonna go too in depth about them, but I want to start with the boring stuff first. I'm gonna take a sip of my coffee and get started. Let me put my microphone away real quick because I don't want to hold it. Come on. I hope you can still hear me. Can you still hear me? I'm asking like you can respond. But, okay. And also, if the lighting is a bit bad, it's still pretty dark outside. Or it's getting light, but I'm forcing light in the room with 2 lamps because I don't want to use the ugly ceiling stuff. But, okay. So, let's just dive into it. I want to start with the boring stuff. Okay. To give you a quick explanation, I took 6 trades on my demo account and I took two trades on my funded account. Now, I want to start with the boring stuff first because this is on my funded account. I noticed that in terms of psychology, there's a huge difference between, or not a huge difference, but there is a pretty noticeable difference between me trading on my demo account and on my funded account. And right now, I feel a bit more comfortable with putting in more reps and learning more about my strategy on the live market on a demo account. So instead, I decided to stick with a demo account for now, just for at least until I'm like, I can definitely have a proof of concept that I know how to trade. I'm not saying that I want to be trading for months on a demo because of course I want to be jumping into passing challenges as soon as possible. But I just feel like right now I just need to make a decision for myself and not constantly jump between demo and funded. So I traded until the 27th. Yeah, I traded actually until the 27th on my funded account, and then also on the same day I started trading back on my demo account, and then from there it started. I just decided to just keep trading on my demo account. So yeah, on the demo account, on the funded account, the first trade that I took for the week was on a Tuesday. Oh no, it was on a Monday. Sorry, my bad. Why does it? Doesn't matter. And I actually took a trade and it was break even. Okay, now let me show you real quick what I'm talking about. This break even trade was the first time that I traded break even. I didn't really understand what break even means, but I did it the wrong way. I traded break even the wrong way. And if I have to kind of explain it in my own words about what I know right now, trading break even is once you have placed your position, you've entered a trade, and the price goes past a certain liquidity point or a confirmation point, something like whatever. Once price breaks that point, you set your stop loss to break even. So whenever price hits back to that spot, you don't lose any money. Now, I don't know how to feel about that idea of trading break even because to be honest, why don't just take the loss and learn from it instead of, trading break even? I understand, risk management and everything, but for now maybe it's a bit inconvenient for me to trade break even because I need to put in the reps and I need to learn from my mistakes instead of try to avoid them. But this break even trade was just pure out of fear. I didn't have enough confidence and trust at all in this trade. So price came down, came up, I hit my confluences, whatever, and then it started chopping. I think it was for like 16 minutes it stopped chopping. Then it went up a little bit and it came crashing down, and I didn't believe in it anymore. So I was like, okay, let me just wait until price is in profit again, and then, you know. But eventually, what is funny about this trade is, and why does this whole thing keep tripping? Come on, man. The funny thing about this trade is that I got out of the trade. I made like, I took this $2.34 loss because of spreads, or I just didn't really got out of it on time, and then price skyrocketed. And that's like a huge confirmation for me that you just need to let your trade roll. You know, you place the trade for a reason. In trading, you also got to be able to trust yourself. You got to trust your edge, your strategy, your entries, and your psychology. And this trade, the first trade of the week, was a huge flop. Like, it was the complete opposite. So after this trade, I told myself, like, I felt so stupid. So I told myself, nah, we ain't doing that shit anymore. Then after that, I took another trade the day after, on the 27th, because I was just like, damn, what the fuck am I doing? Then the second trade, it was a small loss, $15.75. And this was this one. Let's see. Oh yeah, this was pretty interesting. I remember it hit my confluences, but it was pretty weak because I had this 15-minute fair value gap and we had this small wick inside. But usually I would actually like to see price go a little bit more up, you know, maybe touch the 50% zone and then go down. And that actually didn't happen, but I was still like, okay, it is still like, it could still potentially do something. Now, then we came down, we made the 1 minute inverse fair value gap, but I don't remember if it was also a 3 minute inverse fair value gap, which I do want to look for. I want to have an inverse fair value gap on the 1 minute and a 3 minute. And it would even be better if we have one, even a small one, on the 5 minutes. I entered, price came down, it stopped me out about a 1 pip, and then price came a little bit more down. It hit like, I think, take profit, and then it skyrocketed back up. So, you know, it was just maybe, well, not maybe, it was a stop loss problem, because I didn't really focus on where I put my stop loss. I was only looking at take profit. So I just placed my stop loss anywhere. I wasn't really that focused, and then eventually got stopped out. So it was a bit stupid, but anyways, that's the trade for that's the trade for London session. And then on the same day, we also had a trade on USD JPY, which was like a kind of like a sniper trade right after this one. Let me close this one real quick. It was right after this one. And if you look at it, it was the first time I actually used a rejection. I wanted to try out rejections because I heard that TGR once talked about it, that rejections of liquidity sweeps are also pretty good. So we had a rejection of this liquidity sweep. I think it was like a previous session high. Yeah, it was probably the previous session high. And it created the confluences like the 5 minute inverse fair value gap. It retraced into a 3 minute fair value gap into like the golden zone in between them. And then it eventually came down, and I was targeting a sweep point where I saw this point as a potential for it to go back up. But then it came down, and the price just like dumped down. Like there was like this massive bearish candle that just went down. Then for that day, I was, you know, in profit, if you want to say. Then the day after, I took one trade on GBP USD. Let's see, and yeah, it was also pretty interesting because you can already clearly see it. I think I even made a video about this. I should have put my stop loss right here because there was still this small little gap, like this small little wick. It doesn't really do much. So I should have put my stop loss a bit here. Eventually, it looks like price would hit take profit, but it didn't, okay? This was the lowest point it got and then it went back up. So I would have gotten stopped out in the first place, but it would have hit a 1-to-1 RR if I wanted to. But this was, I think it was supposed to be a 1-to-2 RR, but let's see, yeah, 2.1 RR. Jesus, what's wrong with my voice? It wasn't a bad trade. It hit my confluences. Then the day after, Thursday, the 29th of January, we actually took 2 trades. One of them was a loss and the other one was a winner. The loss was on Euro USD. And this one was pretty interesting because I was actually at the gym while I took this trade. I was, or at least I spotted something happening while I was in the gym. So it wasn't like I was super focused and I did like a deep analysis to see what happened before all of this and if it would even make sense. But I saw price overall coming down for a longer period amount of time. I saw this, I think it was like a 5-minute fair value gap. Tapped into it, made this liquidity sweep, this 5-minute liquidity sweep. Price eventually, you know, created a 1-minute inverse, which wasn't a 3-minute inverse. And then it just chopped down until it came back up. So that's a bit unfortunate. And then we have this one, then we have this one also on January the 29th. This one was pretty nice. It was on GBP USD. And if you trade GBP USD, you know how much GBP USD just loves to respect Asia highs and lows during London session. So I trade London session, so I always try to take advantage of it. And I will also go through 2 other trades in a second that show exactly what I'm talking about. Now we were in a downtrend on a higher time frame. So on the day I was bullish, but I saw this 15-minute fair value gap over here. And eventually I saw that Asia low got swept. And it created the confluence that I was looking for instantly. So I wanted to take a light trade. I just wanted to see, all I wanted to see is I wanted to see a sweep, hit my confluences, and then eventually, you know, hit a little retracement as you see right here in a 1-minute fair value gap, and then come up. I didn't wait for the retracement. I entered off the inverse fair value gap instantly, took the risk, hit a nice, what was it? It was 1-to-2 RR. It went to the 15-minute fair value gap, and I'm not sure, but I don't even think it reacted off it. I think it just broke past and it went to the Asia highs. But that just showed that GBP USD always likes to respond to Asia highs and lows. Not every single day, but a majority of the times it likes to respect them. Now to kind of go to the dashboard again. Now yesterday, Friday, the 30th of January. This was a pretty damn interesting day because I took 2 trades. Both of them were pretty good winners, and both of them are showing like the golden example of actually GBP USD respecting Asia highs and Asia lows. Both of them. And I will make a separate video about that, which I will post on Monday, because I absolutely loved both of these trades. These were both A+ setups, and I entered them with like, the first one was with full confidence. The second one, I rated it at 9 out of 10 or 4.5 stars at least out of 5. Why? Because I actually was I actually felt this resistance to enter the trade because I was just so attached to, oh, I already took a win for the day. Maybe I don't want to lose this streak, this 1-win streak. But eventually I was like, fuck that shit, man. If there's an opportunity, if there's a perfect setup, why not just take it? Okay, so the first shot that I took, we were bearish for the day. Like, I didn't want to look for any longs at all. And I almost took this long, but then I was like, we're just gonna wait. We're just gonna be patient because price will calm down eventually. And it wasn't even about trying to catch the reversal. It was just really pure waiting for confluence to get hit. So we came up, we hit the 30-minute fair value gap, we got a 50-minute liquidity sweep, we created a 5-minute fair value gap where price just retraced back into it, which created a 3-minute and a 5-minute inverse fair value gap, and price just skydunked down targeting Asia lows. The reason why I didn't put my take profit to Asia low is because I feel like I just didn't want to be greedy. I just didn't want to be greedy because I've been seeing a couple rejections lately, but that's more to the upside. So I just wanted to kind of, I don't want to play it safe. I know it's also about, taking the risk, but I was fine with just taking this nice 2.79 RR. It's a beautiful trade. And then eventually after Asia low swept it, it came up. And that's where the next trade comes into play. It's this one. And here, after sweeping Asia lows, it came up to Asia highs, and we were still bearish on the day. It tapped into the 50-minute fair value gap. It created a 3-minute inverse fair value gap, and it retraced back into the 3-minute fair value gap as well. There you see right here, they're equal to each other, and price dumped down. I think you see this small trade, it happened X5. This could have been like an easy 1 to 10 RR, but I'm really happy with this trade. Both of them are A+ setups, exactly hit what I was looking for, and I will make a separate video about it on the charts, which I will drop on Monday. But overall this week, it has been a pretty interesting week. I took 8 trades, 3 of them were losers, 4 of them winners, 1 kind of stupid break even because of my own mistake. Right now, I noticed I'm not a big fan of trading break even at all, at least not for when I'm starting out. I have a lot to learn, and to be honest, it's not just about putting in the reps. It's getting a bit boring because right now it's just really about, okay, how much more is there to learn? Not much, because I don't want to overcomplicate my strategy. I have a really simple strategy. It works so far. It's just psychology. I feel like all the trades that I take that are losses, so far, they're just psychology-wise. I'm not patient enough. I react out of fear. I trade against my bias or something like that. And then it actually shows. But the trades that actually do hit take profit, they come out of confidence. They come out of clarity, patience, and just overall focus. Being able to enter the market with the intention of, let's see if we can find a setup, and just sitting your ass down, marking out the confluences you want to get hit and want to see, kind of like think forward, make these scenarios already that, okay, if this happens, this is what I'm going to do. If this doesn't happen, this is what I'm going to do as well. And then overall reacting on it. This is something that I want to take away from the next week. It's just being a little bit more focused on high value, like high quality setups. Being patient, okay? During the week, there are so many opportunities, and I have, the opportunity to trade both London session and to trade New York session. So I'm blessed for that. And so far, I've found that London session is a bit more it's a bit better for me since I trade Forex right now. But I just kind of have to lock in on to just being okay with being bored, because staring at the screen, looking at a couple candles and waiting your ass for something to get hit, it's boring, but it's part of the game. That's the whole part of trading. People quit because it gets boring, it gets hard, they don't see enough wins in a row, they say it doesn't work. But I don't have a reason to quit, to be honest. I'm happy I haven't made trading this sort of it needs to work now, otherwise I'm gonna become homeless. No, it's not like that, because I do have backup-ish. I know I will have a roof on top of my head. So it's like, for me, just putting in the work that I need to do. So yeah, it's boring, but it's working slowly. I just have to double down on psychology, focus, and patience. That's it. Thank you for watching, and I'll see you on Monday.